Welcome to the Riskwiser Zone. I'm your host, Lewis. Today, we're diving into a complex web of global politics and economics that's impacting markets around the world. We start with a surprising move from Peru's new president, José María Balcázar, who has appointed Denise Morales as prime minister, just days after indicating he would choose economist Hernando de Soto for the role. This unexpected change reflects the tumultuous nature of Peru's political landscape, where Balcázar is the country's ninth president since 2016. The appointment of Morales, who previously served as finance minister under ousted President José Jarrí, and the reappointment of Hugo de Zella as foreign minister comes at a critical time. Peru is navigating its relationships with major powers like the US and China, amidst pressures from the Trump administration for Latin American countries to align themselves. This development in Peru's political scene could have significant implications for investors and the global economy. The country's history of presidential turnover and power vacuums has desensitized markets to some extent, but the current situation demands close attention due to its potential to influence trade policies and regional stability. Meanwhile, on the other side of the globe, we're seeing the aftermath of a significant speech by a major world leader that touched on economic policies, trade, and global alliances. The address highlighted ongoing tensions between nations and the challenges of navigating a complex geopolitical landscape. As we explore these stories and more, it's essential to consider the interconnectedness of global events and their potential impact on financial markets. Whether you're an investor looking to diversify your portfolio or simply interested in understanding the intricacies of global economics, this is the place to be. We'll delve deeper into these topics, discussing the implications for investors, the possible outcomes of current geopolitical maneuvers, and how all this might shape the future of finance. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're halfway through the show and we've got a packed segment for you today. Let's dive into the world of tech and finance, where Nvidia is gearing up to release its fourth quarter earnings report. The chipmaker has been on a roll, driven by surging demand for its artificial intelligence accelerators. But the question on everyone's mind is Nvidia's stock too cheap to ignore ahead of Q4 earnings? Now, I know some of you might be thinking, Lewis, why should I care about Nvidia's earnings report? Well, my friends, this is a company that's been at the forefront of the AI revolution, and its performance has significant implications for the broader tech industry. Plus, with a strong track record of revenue and earnings growth, Nvidia's stock has been a favorite among investors. According to Yahoo Finance, Nvidia's Q4 earnings report is expected to reflect strong operating momentum, with revenue and EPS growing at exceptional rates. The company's guidance for $65 billion in revenue suggests 14% sequential growth, largely driven by continued strength in the Blackwell platform. And with the data center segment generating the majority of the company's revenue, it's clear that Nvidia is well-positioned to capitalize on the rapid adoption of AI infrastructure. But here's the thing. Despite its solid fundamentals, Nvidia's stock looks cheap on valuation ahead of the earnings release. It's trading at about 26.7 times forward earnings, which is low given its significant earnings growth potential. Analysts are projecting earnings growth of roughly 58.3% in fiscal 2027, indicating that the stock should command a higher multiple. So, what does this mean for investors? Well, it seems that Nvidia's risk-reward profile remains favorable heading into Q4, with Wall Street analysts maintaining a strong buy consensus rating ahead of earnings. Of course, there are no guarantees in the world of investing, and past performance is not necessarily indicative of future results. We've also seen some interesting moves from other companies in the tech space, including updates on their quarterly earnings reports. Companies like Nvidia, as well as others we mentioned earlier, such as those in our previous segments, all have their own unique stories to tell. For example, several companies have reported strong revenue growth, while others have faced challenges in the current market. As we continue to navigate the complex world of tech and finance, it's essential to stay informed and up to date on the latest developments. And that's exactly what we're here for on the Riskwiser Zone. We'll keep a close eye on Nvidia's earnings report and provide you with expert analysis and insights to help you make informed investment decisions. Welcome back to the Riskwiser Zone. As we wrap up today's episode, let's take a closer look at the recent developments in the tech industry that have been making headlines. The emergence of artificial intelligence has been a game changer, but it also poses significant risks to certain sectors. Specifically, the IT industry has been experiencing a sell-off due to concerns around AI automation in legacy systems. According to recent reports, Anthropic's announcement of its AI tool, Claude Code, has sent shockwaves through the market, with investors fleeing the sector. The Nifty IT index has plummeted over 21% since the announcement, with large-cap IT names taking a hit. This trend is expected to continue, with some experts predicting further downside. However, it's essential to note that the broader markets have been relatively resilient, with the Nifty Midcap 150 and Nifty Smallcap 250 showing only minor declines. Foreign portfolio investors have been net sellers, while domestic institutional investors have been buyers, which could indicate a potential stabilization of the market. As we navigate this complex landscape, it's crucial to consider multiple perspectives. On one hand, AI automation can bring about significant efficiencies and cost savings. On the other hand, it also poses risks to jobs and industries that are heavily reliant on legacy systems. In conclusion, the ongoing IT sell-off driven by AI concerns is a reminder of the importance of staying informed and adapting to changing market conditions. As investors, it's essential to be aware of the potential risks and opportunities presented by emerging technologies like AI. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.